Hey, Wealth Press subscribers and viewers, welcome to another midweek update. I'm here as usual with Lance Ippolito. Lance, welcome.
Hey, James, good to be here.
So tell me, what's the story, Morning Glory, on this market?
We're starting to see a rotation out of technology names. So the NASDAQ and actually into value stocks, specifically banks are starting to see some nice inflows today with Morgan Stanley coming out beating top and bottom. And that's rallying some bank stocks like Wells Fargo up over 2% today. And you're also seeing Goldman Sachs rally after they had a phenomenal earnings yesterday.
Yeah, I found it interesting that the earnings were exclusively from the trade desk in both cases, and yet there are other warnings on like page 6 of the business section of the Financial Times about the destruction that's about to unfold in Goldman Sachs and Morgan Stanley's debt deals, debt business, because there are imploding debt funds, so their prime brokerage is exposed. There are imploding, major commercial mortgages that are imploding, and so I found it interesting, that the net effect of Sarbanes-Oxley was to force that division back into the banks not allowed to trade their own book sort of illusion for the public, and yet here they are making money hand over fist on the market that they're basically
supposed to not.
Exactly, and they're being capitalized by the Fed. So it's just it's a remarkable case of two-tier sort of market and justice system that we can shout about it from the rooftops all we want. We won't change a thing because
no,
it don't matter.
Yeah, exactly. Bank of America is down today, and they had their loan business is basically a dark cloud. But if you really look at these bank earnings, it's trading. And it's been that way for years now. But it's, right now with the economy so bad, it's really the saving grace. And, look at Wells Fargo, the worst earnings since 2008. And here they are laying off staff. And, we look at the market bounce, right? The S&P, the Dow, obviously the NASDAQ, just hitting new highs the other day. These bank stocks, they're not looking so good, or they never got that bounce up until, today, literally. HSBC Bank, Wells Fargo Bank, they're right near 52-week lows.
Yeah, that's interesting. So is there order flow on the option desk on those guys?
So it's reactive flow. I like to favor proactive flow. Obviously, you're not going to have, let's say, unusual or raising an eyebrow orders on bank stocks. It's just you rarely ever see that in general. You are starting to see some Morgan Stanley call buying for August expiration. They are in the money call, so a higher delta. It's usually a good sign. That's really it, though. I mean, every time you have bank rotation in the past, it's been a 1 or 2 day event, and then they just bounce right back down. It's kind of similar to the airliners and cruise liners. You'll have like a 1 or 2 day big short squeeze, like yesterday that we saw in Royal Caribbean, Carnival, and the airliners. And then today you just bloop, that balloon deflates and they go back into reality with some of the cruise liners down. Carnival down 7.5%, Norwegian down 12%. Airliners down around 5% or so. So, back to normal.
Sure. Of all the industries for whom the open the economy sort of hoopla is going to have zero effect, I guess it's probably cruise ships. After all the news of people getting quarantined on cruise ships, nobody wants to be stuck there again if things go south.
Exactly. And you had the Saudis buying a Carnival. I think that was about a month or two ago. And there's still a lot of hope. Norwegian just did an offering, I believe it was this morning. Just like you said, I mean, I'm in Florida. I'm an hour or 15 minutes away from the port here where we have cruises. Orlando's another hub. South Florida's another hub. I have no desire to go on a cruise. Even before this, when you go on one or two, you get the picture of it. The food wasn't that good.
Yeah.
Yeah.
Yeah,
No
I've
desire.
I've actually never been on a cruise because the idea of being stuck on a floating apartment building with 3,200 people that I may or may not have something in common with horrifies me. Like that would absolutely be worst case scenario. And let's just say that I tend to identify with a less conventional sort of cultural swath of the population, and so to find 3,200 of them on one boat is also equally horrifying. So it's like, no, cruises for me were never an attraction, though I could see possibly in retirement. I do understand it's a multi-billion-dollar industry, or at least it was. The thinking for me is like, what possible catalyst could cause people to say, yeah, I'm gonna go on a cruise. I'm gonna book a cruise 8 months out and hope that there's not either a second wave of the coronavirus pandemic, B, a resurgence of the bird slash pig slash mad cow.
new virus. Yeah.
Exactly. And I'm just going to roll the dice and take my chances and hope that in 8 months' time, the destruction of the global ecology has not resulted in more unleashing of infectious diseases. That, to me, I just don't see what could make that industry recover, short of the government stepping in and say, well, you know what, we're going to come in and we're going to buy you out. We're going to give you your high
But
average over 52 weeks going back from February.
the problem is with government bailouts of the cruises is they're not even U.S. based. For what I'll assume for tax reasons, they're in these foreign countries. So why should the U.S. federal government bail them out if they were already trying to, we'll say, sidestep laws? And one thing you have to figure with these cruise ships is usually the destinations they go to, at least here in Florida. So obviously a lot of Caribbean cruises, not the healthiest economy in the countries they go to. We'll put it that way. So you're already having, let's say, a depressed country that they're going to, and that's just obviously going to get worse thanks to the coronavirus. So I mean, I have no desire to go to Mexico. I'll drive down there if I want to. I have no desire to go to the British Virgin Islands right now or Jamaica. Yeah, they're great places to vacation, but the one thing that I can see is some European cruises, Alaska cruises. Like I went on a 2-week cruise in Alaska. I can see how that could possibly bounce back, and that you do have normally your retirees who have 2 weeks to take a vacation to go on a cruise. But I don't know how much that makes up of their business from a money point of view. But when I think of cruises, I would probably assume the general population thinks this way. They think of coming out, going to the Caribbean, drinking a pina colada, on the sunshine, cruise ship, pool, tan, going down water slides.
Yeah. Okay, so banks are having a day in the sun, cruise ships are having a day in the rain. What else is going on in the markets? How are our coronavirus stay-at-home stocks, and how are our coronavirus vaccine stocks? I mean, I read Moderna had some good initial results, very positive. I've heard that there's some light at the end of that tunnel, at least on the headline sense.
Yeah. So the one name that I was in this week is AstraZeneca, AZN. It made some really good money on call options there. I bought the calls at $1. They got down to about 40 cents. And then yesterday I was selling about 175 and they traded all the way up to like 380. So sold a little too early, but today they had some more data and the stock is down about 2%. But the mRNA, that name, it printed about 91.99 on the news, on the vaccine news yesterday, and it traded all the way down to about 80, 82-ish. So, massive sell-off from the highs. That name has a history of, we'll just say, smoke and mirrors, where the management of the team likes to go in the financial media and talk about the vaccine trials. But from an insider point of view, they have been selling stock hand over fist. And I believe yesterday they got out of the option warrants officially. So it seems to be like these folks at Moderna have made millions upon millions of dollars with no actual product yet that has been released. And last I heard, they were valued at one of the top 20 most valuable biotech companies with no product.
Well, it sounds like they're running a pretty sophisticated promote. And all I can say is lawyer up, boys, because once the class actions start flying, a lot of that money that you made is going to be going back to your own defense.
And what's a little shaky is I believe they got added to the NASDAQ. So that was the catalyst even before the whole vaccine news. So that was the catalyst on Monday, where the stock went from 64 to about 77. Then so we're looking at basically 64 to 90 bucks in a couple days, and everyone's hitting the sell in the management point of view. I mean, a little fishy to say the least.
Yeah, no doubt.
I'll give it the fish smell. So I'm not saying anything bad about them. I have no position, just to be clear on it. I'm just
right,
giving my analysis.
Sure. Okay. And any other sector that you think is worth paying attention to right now?
Utilities, nothing sexy. I always say they're not gonna go up 20%, and they're not gonna save the world, so to speak. They're not interesting like a Netflix that has earnings, right, but they're seeing nice rotation continuing, and they remain a safe asset, a safe sector in the marketplace.
Cool. All right. Well, let's leave it there for now. Lance, thanks for the update. We'll talk to you next week on the Roundtable.
Thanks, James. Chat soon.